Welcome traders. So we're back at it again. Or I might say, welcome assassins. So, anyways, this is a dollar chart. I'm still expecting dollars to still keep rising higher. These are my targets long term. So I don't think it's going to be a straight shot. Of course, I think we might see some back and forth. But we created a monthly order block, and I think we're marching towards the next opposing, PD array, which would be a monthly order block, and then eventually monthly fair value gap. So I think this is where my eyes are long term for dollar. We had a kind of a little slightly bearish week, did we? Let's see. Well, essentially we had this is the week we had. So nothing really has changed to me in the direction of dollar. I'm still expecting dollars to keep going higher. And all of these markets are kind of at a critical point, as I'll point out later on. Okay, and in this video, by the way, I'm going to be breaking down the dollar intraday price, what happened last week. I'm going to break down the trades that took in NASDAQ, and also I'm going to talk about bias a little bit. So let's get into it. Daily chart. So on daily charts, you see this was previous week's trading. All right here. So what we do, we created an order block, then traded lower, trade into this gap, which I did call on I said we are gonna see dollar going to 108.80. I actually tweeted that on Instagram. On Twitter. So let's see if I can show out an image. This is my second time recording this video, and this picture. There we go. Picture trying to disappear. Okay, he's not trying to let me show y'all. A little ego. All right. Anyways, this was the dollar. Where I tweeted about a dollar. Put it right here. Since it wants to play. So I'm gonna tell you why I was expecting dollars to drop. So I tweeted this at 8:22 a.m., which is really 9:22 New York time. So here on this candle, essentially, when it's going higher, everyone's probably expecting it to keep going higher. I was still calling for 108.80, and as we trade into there, we've dropped into 108.80, and we just been bouncing, dancing around here. So that's all I was expecting for the move on the weekend. I'm going to explain why I was expecting that. And now, with the dollar, now we've traded into here. A lot of people, there'll be nothing wrong for dollars to trade lower and then trade into this fair value gap, then bounce. That is very possible. I'm going to get this out of the way for now. That is very possible for us to go into this fair value gap, clear up all this liquidity. But at the same time, I don't think it's necessary. Reason being, if you look on the daily, it seems like this level, they've kind of consolidated around here. And mind you, this is a fair value gap. Yes, we've gapped below it, in between. But now there's a gap in here. Price will essentially eventually come back in to at least give some type of buy side. Some buying should go on within this gap. I don't see just straight dropping. So I think if we do start seeing a bounce here, and mind you, this right here is a weekly fair value gap. So we could drop in here first, then start trading higher. But what I'm just trying to get to is if we start seeing a bounce without taking out this level, I'm going to be bullish. So if we start bouncing around here, let's just say, or we trading to here first, then start bouncing, I'm going to be bullish. Essentially, I'm bullish around this area. I'm waiting for dollars to give me the reason to go to buy. So Monday, I'm not going to rush into the markets. I'm going to kind of, sit back and see what happens, especially not London session. I'm not touching that at all. The markets are at very, very critical levels, and it wouldn't be wise to just start pressing buttons. My objective was hit for the week, and now we're sitting right at it. So I just got to see what the market gives me before I decide to make any other further decision. So that's dollar for you, and I'm going to come back to this, like I said, to break down this intra week. But still bullish on dollar. Nothing has changed. I'll go to NASDAQ real quick. So on NASDAQ, let's just go on the weekly chart to see something. We've traded into a weekly fair value gap, essentially. If you look between this candle's low and this candle's high, that's a weekly fair value gap. So I know if you look on the 1 hour, it looks like we're going crazily, we're just going higher. But I believe we could just eventually start trading lower. So you see, essentially, indices as well. If you look at S&P, if you look at your US 30, they're all in this weekly fair value gap. Dollar is at a critical level too. So that's why I said I'm not just going to touch buttons. I want to see what the market gives me. Mind you, this week is going to be a good week because we have CPI. We have a couple of market movers. So Monday, I'm probably not going to trade. You know, if anything, maybe late in New York session. If not, I'm just not going to touch the market. I just want to see what the market gives me. And I'm still expecting this to drop lower. See, it's going to be, reason why is because this looks like a market maker sell model, where we've had all the buying, going higher into a weekly fair value gap. And now we have selling. Create this order block. Selling again. And all we do is trade higher into that swing point. All right. And this is a daily fair value gap, also weekly fair value gap, and I'm expecting another drop below here. I'm still expecting a big run on dollar still, so that gives me the inclination that we're still gonna run below these lows. And mind you, like I said, we traded higher and higher and higher, and now it seems like we're curving to go lower, lower, and lower. So that's what I'm looking at. And also, it's my Twitter page again. I'll tweet it. As you can see, at 9:06 a.m., I said, and this is on September 9th, I said I could definitely see 12,650 today on NASDAQ with a typo. Might be a stretch, but I believe if not today, then next weekend. What do we have? Or it's 12,650. Boom, right where the mouse is, 12,650. Target hit. Now I was able to take some trades on this and execute, so I'm gonna break that down as well. So first, let's get into, I guess, the dollar and the reason why. See where 9:06 a.m. was. 9:06 pretty much 10:06, I want to say. September 9th. 9:06. Yeah, somewhere on this candle, that's when I made that tweet. Yeah. So we can still go up here. So we hit that today. Last week we didn't really get into it. We just hit it today with this big move. 12,650. So everything's been accomplished. Dollar hit its target. And NASDAQ hit its target. Now let's break down why I was calling dollar to go to 108.80, which we have here today. So first, we created a daily order block. This is essential to price. I'm gonna delete this for now. We created a daily order block. Why is the order block? Because it's up close candle and a down close candle. This candle breaks below this candle's open. Essentially, the way I look at order blocks is who overpowered who. What does that mean? So, for example, the previous candle was a buying candle. So the bulls bought and bought and bought. The next candle was selling. Then the bears started selling and selling and sold more than the bulls could buy. How do we know that? Because where the candle opened, that's where the bulls started buying. Because you got to think about it, right? When the candle opens, it can either go up or down. So it's either bull or bearish. And we had an initial tug of war. We went down first, and the bulls took over. Boom, went higher and higher. Then this candle, the bulls went, when it opened up, the bulls went higher and higher again. Then the bears said, okay, thanks. We're going to take it low from here. Boom, 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 boom. And then when the candle closes or traded below the buying candles open, now the selling has overtaken the buying. So now we have an order block created. So once that's in place, now I'm looking at what's the next level that's, market's probably gonna reach for. There's a fair value gap in here. Fair value gap. That's the only other level. So once this happened, my eyes is already on this. So when we trade it, boom, below the order block. See that? Now, we're not just gonna keep selling. You want to wait the market to come to you. You want to wait for it to retrace. You want to buy the market when it's at least at a 50% retracement at minimum. So if you draw a fib from here to the low, 50% is at least here. What does the market do? It trades into that. What is this? A fair value gap. So you gotta remember, don't just sell. Even this order block right here on the 4 hour. I know this fib is kind of blocking it. You kind of see this order block, and the market did trade into that. And some people that are not patient enough, they probably sold, right? Well, why would you use this candle? You shouldn't use this candle because it's not even above the 50%. You want to keep on thinking about the market within premium and discount. Premium is above 50%. Discount is below 50%. So that's kind of how the algorithm works. The algorithm is gonna pretty much, the sell is gonna kick in when the market trades above the 50% level. So we wait for that. So we draw the fib. 50% is right here. So this fair value gap will be valid, and then also this order block right here on the 4 hour is solid. So look how I went from a higher time frame to now 4 hour time frame. So daily already told us we have a bearish order block. Daily rate shows us we have a fair value gap here. So now I know that. I go to a 4 hour time frame. I see this gap in here that's above the 50% level. I see this order block that's above the 50% level. So now I'm interested in that. And also, this is also another trade model where the market trades lower, breaks structure, broke the structure, trades back into a fair value gap. And this is on the 4 hour time frame, so we can expect another drop, at least below the liquidity point, right? Because it's less liquidity, and then what do we have after that? A daily fair value gap. So that's why I was expecting the dollar to drop, just based off of that alone. So, and notice how within this 4 hour order block, we have another 1 hour order block right here. And I talked about some of my old videos how when you see a high time frame order block, you want to kind of see if there's in the lower time frame, if there's another order block nested within that high time frame order block. And here we do. We have 1 hour order block right here. And hits it, doesn't even trade above the candle's high, and eventually trade. It was a slow day, honestly speaking. It was a swing trade, which I was able to swing on my Nasdaq trade, but boom, trade lower and lower into straight direct into this 108.80. So this was trading higher at 920, right? I'm expecting the price to keep going lower while everyone's panicking. This image keeps disappearing. I wish I could show. This September 8th, by the way. Lord, let's see if I can find it real quick again for y'all. So remember, September 8th, 8:22 a.m. September 8th, 8:22 a.m., which is 9:22 New York time, right in here. So around one of these candles, I was still expecting this drop in here. If you look at the overall week, what do we have? So the week started right here. All we did we traded higher, creating a Judah swing. Then we went lower, breaking structure. Trade higher again to fair value gap. Now we have all of this market structure and all this price action that took place. All this, price going higher and higher and dropping. We have all this on the back end that happened. And then going into Thursday, we have a little pump higher into a fair value gap. Also knocking out liquidity, because this was London sessions liquidity. So you want to see those type of things. Boom, we create another order block here. Once that order block is created, What do we expect? Prices drop, 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 and we drop into this level. So that was a beautiful trade that you could have taken on an opposing market like the euro or even indices for a buy. And I actually wasn't a buying euro at first, but I couldn't hold, honestly speaking, because indices was moving more. So I just decided to close on my euro trade. But if you look at euro and pound, I believe you see that the market did the opposite. If you were able to hold and swing this into this level. So NASDAQ, which I actually did take a trade on. Let's go ahead and break down NASDAQ as well. Okay, I'm gonna hide this real quick. We're gonna come back to this, but remember this one I tweeted on September 9th, 9:06 a.m., which is 10:06 New York time, 12:650. Let's hide this for now. How's my timer in case you heard that? But what do we have here? How the week start? So the week started here on this candle. Notice how the previous week all we did was trade down aggressively, taking out liquidity, right? And what do we trade into? Right here, a weekly order block. So we traded lower. Just how you kind of want to look at your charts. You want to pay attention to what's happening. We traded lower and lower and lower into a weekly order block, and we even trade below liquidity. Now, what else do you see here? There's a daily order block within the weekly order block. So notice what happens when we hit that level. I'm going to use green for the daily, orange for the weekly. Boom. We create an order block, and now why is this? Once we create an order block, I'm just going to draw another line. So now we have a double confluence. This is how you want to kind of pick your levels. You want to pay attention to what's going on, the high time frame and the time frame below that. So once this order block is created, just same as dollar created this order block, our bias now becomes, okay, what level do we have that's on the premium side of things? Because clearly within this range, we traded lower. So now we're way below 50%. Now, remember, from this range high to this range low, you want to measure that. The 50% is up here. So for us to be in a premium, because now we're in a discount. For us to be in a premium or get to a premium, we have to trade above 50%. What is above 50%? Well, this high and then this daily fair value gap. So that's why I was expecting us to go higher. Now, what's the catalyst? What makes me start believing we're going to go higher? Well, we trade to weekly order block right here, this orange level. Then we create a daily order block. So now what happens then? Boom. Remember, it's a daily order block with a weekly order block. Then we have a fair value gap in price. Interesting. So we have 3 PD arrays, 3 things that's going for us. Like even say 4 things, because remember, we traded lower, take out liquidity, that's 1. We took out liquidity. Then we traded into a weekly order block, that's 2. Then we traded into a daily order block next to the weekly order block, that's 3. Then we create a daily order block at a significant level. We create a daily order block at a weekly order block, that's 4. Then you look on your lower time frame, you have a 4-hour fair value gap right at that level. That's 5 different reasons. They want me I can give you 6. We went higher, and this is a break of structure. Yes. Is there a fair value gap? Yes. That's what 6 things going for you to consider this a potential. What do you think I did? Executed. So much shit on my chart right now. I hate it, but I don't know if I even bought down here as well. I don't know if these made me money. Sell. Let's see. Yeah, I think I sold quickly. Either I sold quickly 10, 20, 30 positions, and I bought that back 10, 20, 30 positions. But anyways, on the next day, which was September 8th, I bought here. So same time around 9:22, when I was saying the dollar was gonna go to 108.80. So now we have dollar was also another confluence. You see so many things that were in play. So you have dollar, you're expecting to go lower because we have a 4-hour break of structure and fair value gap. What do we have here on Nasdaq? Same thing. Boom, we break structure, and I'm gonna take away these the labels in a second, but I just want to show you where I bought. So we break structure. Let's hide all these executions because it's a lot. So we have break of structure on the 4-hour. Draw a fib. Why am I not paying attention to this fair value gap? Why would I expect to trade lower? Because if you draw a fib from this range, from this low to this high, the algorithm has to go back into a discount, which is below 50%. So when it trades below here, which is at a daily level and a weekly level, I'm in that trade all day long. And where am I targeting at minimum? You can get out here, here, here. Because guess what retail had? A trend line. So if you're a retail trader, if you know this, we had a trend line, we broke out a trend line, and boom, it didn't even retest. The retail wait for a retest here. This is why I don't trade retail. And this line clearly is very subjective, but this gap is not. This 4-hour fair value gap is not. So point is, we break structure, hop in this fair value gap at a daily order block, weekly order block, and boom, trade higher. Now let's break down even some more. I'll put on the daily dividers. Now let's see what happens here, if there's anything that gave us an entry. I'm just gonna draw all the down close candles, all the 4-hour order blocks essentially. I'm gonna draw a line on them to see something. See if y'all see a pattern that reoccurs. Let's go on 1 hour first. So 1 hour, boom, we get in here. Remember, market trades higher. It just starts drifting higher. And honestly speaking, it was hard to hold because I'm used to just trading intraday, but I'm slowly morphing and I've been back testing a lot, putting in a lot of work. And I'm starting to really understand swing trading and how it works. So I was very confident in this trade. It's just time has to play its role. Anyways, another 4-hour order block here, this blue line. There was a gap in price. I knew it was going to go here, so you could have used this as an entry. Let's go to 15-minute time frame real quick. See if there's anything that looks good. Nothing really on the lower time frame. So this is one of the markets where there's a gap in price right here. This is one of the markets where you had to understand swing trading in order for you to capitalize on this. But I was definitely able to capitalize. I bought in 10 lots here, sold 10. I bought in 10 again, sold 5 right here. I didn't want to have that much of a position on. I sold another 5 right here. Now I bought in again. Why did I buy in here? On S&P, actually, I was able to hold way longer. I might just show y'all that as well quickly. Okay, I also bought S&P. So I bought in, you see 10 here, sold here because it was taking too much time. Even though I knew the target was going to be here, it's Friday, didn't want to force it. And this is my first time doing this freaking screenshot of a thing, and this is giving me a headache. I just want to bring this to your attention one more time. So this is at 9:06 a.m., which is 10:06 a.m. New York time. So 10:06 a.m. New York time. We're just gonna go to it. It's around this where this candle's trading. So that's why I took this trade, because I saw a 4-hour order block created, and I see a fair value gap. All right, see it, peep it again. It took liquidity, traded higher, breaking structure. Market trades back in here, took a buy, exited here, just quickly. So this trade, like I said, unless you saw what's going on the higher time frame, on the daily 4-hour, you have probably missed it, because this looks so messy. All this 1 hour movement looks messy. But if you look at a 4-hour chart, and I'm just taking with these executions, no need to even show them anymore. If you look at a 4-hour chart, you've seen clearly when we had to break a structure, all you could have done is buy and hold till we hit our terminus, till we hit our target. The account right now, I had to start this over. It's at 102,500. I had an issue with my other account. I couldn't close out a trade. Trading was under maintenance, and it happened over the weekend, last weekend, not this weekend. And essentially, my account on Monday was down like 15,000, 13,000. So I just said, fuck it. And that account, I had actually brought it up from its low of 77,000 to back to 103,000. So I actually wanted to keep trading that account, but after losing another 15,000 that I didn't plan on losing, just based off of an error by the system, I just said, yeah, I'm off that. So essentially, I started over. And we had 102,000, and I'm just gonna see. I know I took a trade on S&P as well with the same type of logic. One more time, just to bring this video to a close. That's a daily fair value gap. Now another one. Create an order block in here. Once the order block was created, why is it important? It's a weekly fair value gap. I'm hoping you can just see this on your own. There's a weekly fair value gap in here. I'm trying to draw it out. Okay. Very hard to draw. There we go. So, there's a weekly fair value gap in here. Order block as well, if you want to consider that. Daily. So once we trade into here on the trade to weekly fair value gap, create an order block. Market trades back into the daily order block. What do we have above? A swing high and a fair value gap. So they have to go and upset sellers. If we're on 4-hour, what do we have? Boom. Market trade into this fair value gap. Right here. And I believe I took a trade on this as well. Okay, I'm on this chart, but I bought something here. There's a lot going on, but same thing. I'm just gonna focus on this level. But that 4-hour fair value gap is here. I bought 50, sold 25, sold 12. So I had about another 12.5 on, I believe, or 13 on. They had 13 positions on, and so buying here with 50 positions. I closed out everything officially up here, and I was able to buy some more down here. If you peep, same thing I bought on NASDAQ. It was just too clear for me. There was no reason for me not to keep, to buy, especially the fact that we were closer to the target. I knew it was gonna hit it, and I know I'm moving a little too quick now, but shed a lot. I was able to buy down here based off this fair value gap. Why did I do that? Because NASDAQ made a lower low. So NASDAQ traded below its low while S&P did not. So I gave it some time, and the market gave us some time. As you can see, 1, 2, 3 candles of it not going below here. So I took a buy, knowing that it's probably not going to trade lower, and exited up here. So it's a beautiful week. Again, You need to always have it once you're on higher time frame levels like weekly charts. I mean weekly order blocks, monthly order blocks, daily order blocks. Those three time frames. Once you see a monthly, weekly, or daily order block form, you want to kind of look at what's the opposing thing. What's the opposing PD array is it going to go to? Is it going to be a fair value gap? Is it going to be an opposing order block, or is it going to be an opposing high? So that kind of gives you your bias. Once you see an order block created, especially if the order block is created after trading to a higher time frame level, you want to start, seeing what's the opposing level it can reach to, or at minimum, it needs to go from discount to premium or premium to discount. So, hope that was helpful, and I'll see y'all again, Assassins. Probably talk to y'all again tomorrow. We'll see where the account goes. 102,000. So, 2.5% gain. Started it on the 6th. So, start off bad. But we slowly got it back, and yeah, let's see where I grow this account. Hopefully I get to $150,000 for the end of the year, or for the end of the month. You know what I'm saying? So anyways, I'll talk to y'all later. Y'all have a wonderful day, and let's see what this markets give us. Hopefully, like I said, dollar, I'm expecting to continue higher, and I'm expecting the indices to eventually drop. But they have to show their hand first before we enter. So stay safe. Talk to you next time.